from a currency standpoint, Alan, which is what we tend to turn to you for, what's more interesting? What's happening with phase one or Brexit?
I think more Brexit, at least this weekend. It could be very exciting, right? A yes or no to Boris Johnson's plan, and I think you're talking about sterling either trading perhaps as low as 126 against the dollar or as high as 132, 133. That's a big spread there. The phase one story, I think, that's come. Let's see that we can actually cross the T's and dot the I's on this. I don't think that that's really a story for volatility. In fact, I think it's going to contain volatility in dollar China.
And it does seem that it's such a toss-up as to what could happen on Saturday. We've tried this 3 times before with Theresa May's plan. We've heard some say this isn't even as good as what that plan was. So there's no guarantee we're going to see this thing pass for Brexit.
That's right. Yeah, I think the odds by a smidgen really favor a no. So then we go back to scenarios which look more like elections and perhaps even a referendum. But the election story, I think, is more constructive this time round because the Conservatives have effectively signed on to something at this point in time. There is a plan, and it's not a hard Brexit plan. So in that sense, it is more constructive from a pound standpoint. But it does mean there are a lot of iterations and lots of uncertainty still ahead.
Shawn, how does this change, if at all, the relative strength of U.S. equities around the world?
I don't think it changes it that much. I think that the real story is in the FX space as well as in the bond markets and sovereign debt markets. As you see rates start to back up and people start to talk about monetary policy and how it's not really working at the margin and the fiscal policy that needs to be put in place. So I think the equity market has still an underlying bid in it. It has for a while. I think that'll continue unless earnings are really bad, which I think earnings aren't going to be great. But I think people are looking through and have their glasses on saying this is a great market, we should be invested in it because there's nowhere else to go. So I think the equity market still does okay.
Yeah, earnings season, Shawn, I mean, Bespoke says of the 24 companies that have printed since Thursday, only 3 have missed out of 24. We know all these CEO confidence surveys are abysmal. That's not how the commentary's turned out.
Well, you always have earnings which are skewed because earnings expectations are always too low, right? So that's the way it works when you think about, earnings numbers that are out there and published versus what they actually come in at. They beat 80% of the time anyway. So that's not really the issue. It's what's the forward expectations and what the outlooks are going to be. And those are a little bit more murky as people still have to work their way through the trade issues, still look at CapEx and where they're going. So it's still a difficult environment. But investors actually like the market, and they're comparing it to a 1 3/4 10-year in the U.S. marketplace and saying it looks good.
As we look at what's going on with the trade headlines and then just getting this China data today with the growth the slowest that we've seen in 30 years, Eunice said, look for some more stimulus to come. But isn't 6% about in the range for the annual target for China anyway?
Yeah, I think 6% is in the range, but it needs more stimulus to achieve that. And I think we're already seeing some of the effects of more stimulus. So infrastructure spending has moved up. So there's some fiscal story that's in the works. We had a lot of different monetary policy easings, inclusive of a weaker exchange rate that's feeding through. So we're needing a lot of stimulus just to keep growth at 6%, which, of course, most countries would be very happy with.
Hey, Shawn, let me come to you on fixed income for a second, broadly speaking, just in terms of credit, because I know you watch that. I mean, I'm hearing some private equity deals at least being contemplated at leverage ratios I haven't heard in a while. High yield continues to trade pretty tight. CLOs, what's your overall sense right now?
Well, you start to see a bifurcation in the high yield space. So the lower credits and high yield have underperformed drastically over the last couple of months. They're probably actually interesting places to put money to work at some point in time. So the high end of the high yield market is doing well. The low end isn't. So from a leverage standpoint, it's logical kind of late cycle thought process where all of a sudden, the worst companies should do worse. Right? So you're starting to see that happen. The extra stimulus that's been pumped into the system, and you pretty much have every central bank pumping liquidity into the marketplace at this point in time, allows the credit market to continue to perform okay, and probably pushes out a scenario where there's going to be a credit issue into late 2020, 2021.
Finally, Alan, on the dollar, we talked a bit about it. Does sterling help break the dollar even a little bit? And on the second point, what if Warren were to win the nomination?
Yeah, two very different stories in a sense, but absolutely. I think sterling has had some impact in putting some sort of base on Eurodollar. Let's see how this plays out. As we spoke about earlier, it's very fluid, but we've been bumping along the top and not really being able to gather much impetus. I think the election story maybe does feed into that, because I think there is fear in the marketplace about the Democrats and Warren in particular in terms of underlying assets and perhaps what that might mean from a fiscal policy and monetary policy standpoint. But I think regardless of who's president, I think we are hitting this phase now where U.S. interest rates are coming down and it's starting to take its toll. U.S. is now no longer the highest two-year yield in the G10 world. Canada's usurped the U.S.'s role there. And that's the first time in 20 months. So finally, I think we're starting to see some interest rate effect in which it's starting to have a negative impact on the dollar.
Shawn, I think it was earlier this week that Leon Cooperman on CNBC's Squawk Box said if Warren wins the election, the market loses 25%. Do you agree with that assessment?
I've said 15 all along, so I'm in the camp that clearly financial assets will have a problem if she gets elected. Certainly, specific areas will have a worse go than others, but in general, it'll be a tough go for financial assets if she's elected.